TD Traders, and you're watching the Daily Market Review with me, financial analyst of Grand Capital Company, Sergey Lin. And our daily heading is dedicated to global forex and fixed income news. So let's see what is happening on financial markets today. And so, by the way, today is 15th of May of June. And let's start. Let's start from Forex news. And what I have here: steering slate in European trade as a launch of new liquidity measures by the Bank of England to help shield the UK from euro crisis fallout, fans suspicions that central bank is preparing for a rate cut. The currency should come 0.3% against the dollar and the euro after the central bank said Friday it would hold an extended collateral term repo or ESTR auction once a month starting 20 June. Sterling traded as low as 1.5483 and the euro hit the day's high at Great Britain pound 0.8152. Rates marked move to the price in a greater than 80% chance of an interest rate cut by the BOE, by Bank of England, before the end of this year, up from 50% chance Thursday. The shifts follow announcement by the Bank of England Thursday that it will activate an emergency liquidity facility to offer cheap 6 months loans to UK banks in exchange for a wide range of collateral. The step locked borrowing costs for a wide range of instruments in the UK, Friday pushing the currency lower. The big sterling drop is very much, I will say now, the quotation of Mr. Geoff Kendrick, head of European Forex strategy at Nomura. He said the big sterling's drop is very much in line with the drop in interest rates with this morning, so it's very much an old school style currency move. That's was what he said. About what I can say about bonds. US treasuries were in positive territory, but only just with markets adopting a wait and see stance ahead of Sunday's all important Greek elections. The September contract was 232, higher at 133 and till 185, while the yield on the 10-year nudged a fraction lower to 1.61%. Thursday's 13 billion 30-year auction produced solid results, failing to match the strong 10-year auction on Wednesday, with the BC gauge of demand on the delight side at 2.4, down from 2.73 last month and 2.67 average last year, according to Morgan Stanley. So the cost of insuring European corporate debt against defaults fell as sentiment was lifted by reports the major central banks will act to stabilize markets if needed after Sunday's election in Greece. At around 5 ET, the ATRAX Europe index, which comprises 125 high-grade borrowers, 25 of which are banks and insurers, was it at 175 and 176 basis points, 4 basis points wider from Thursday's close. The crossover index of 40 mostly sub-investment grade European corporate borrowers was 16 basis points wider at 682 and 686 basis points. So, okay, I will say a couple of words about commodities. And speculation that the Federal Reserve may soon pursue further stimulus measures has likely contributed to the rises in oil futures and sets GBC energy. The likelihood of such a step is increasing as worrying signals are coming from the US job market, with the number of Americans filing for unemployment benefits rising last week for the fifth time in the past 6 weeks. Gold's recent uptrend could peter out ahead of the weekend, as investors remain cautious about the Greek election June 17. VTB Capital analyst Andrew Krychenko said in a report next week is said to be challenging for gold. He said, but noted that risk aversion in global markets could be an opportunity for its safe haven properties to shine again. Krychenkov also tipped gold's near-term support at 1.580 OZ and then at 1.554 OZ. Resistance is at 1.626 30 OZ and then at 1.640 OZ. So, my dear traders, that was all for today. It was me, financial analyst of Grand Capital Company, Sergey Lin, with you. Thanks for watching. For more additional analytic and information, visit our website. It's www.grandcapital.net. You will see there a lot of interesting analytic information about bonuses, actions, and so on. And I wish you the fair trends and good luck and goodbye.